So this was the trade I took today. Yeah, please sorry for the bad lighting. I know I don't have enough light in here. So this was the trade I took today. So we had an L in the first trade. If we check the history, we had a $3 loss in the first trade, but we ended up making it all back. So this was the trade. So as soon as we had this 1 minute inverse fair value gap, when we tapped into the daily fair value gap, because I was expecting to see some bullish reaction, right? So let me just hide this. Let me just hide this. So as we saw, as price tapped into this daily fair value gap after sweeping our previous day lows, I was expecting to see some reaction to the upside, right? So we made an inverse 1 minute fair value gap, which is right here. We had an inverse 1 minute fair value gap, and as soon as price started returning back into this inverse, I took a buy trade immediately. And as you can see, that was where I took my buy trade on this candle. So I took my buy trade immediately, but then price ended up taking me out because this was where my stop loss was at. And immediately as price took me out, I took a trade. This is not gambling. I took this trade because we are inversing this 1 minute fair value gap. And also because we have literally just tapped into a 1 minute fair value gap on S&P. Like, that was a mistake I did. I wouldn't have taken this buy if I was actually having a close watch on S&P, because as you can see, with tapping into this 1 minute gap and we're actually drawing down, we're actually seeing some bearish reaction. So it wouldn't make sense looking for a buy trade when we're already tapping into a 1 minute fair value gap. Obviously, we've inversed a 5 minute gap, but we have this 1 minute gap who is obstructing us to go higher. I know in the previous videos I said when price is in a higher time frame fair value gap, we most times disrespect the lower time frame fair value gaps. But in this occasion, like I said, if we inverse the first lower time frame fair value gaps, it's always good to aim for the next lower time frame fair value gap. So let's say we took this trade off this 1 minute inverse, because right here we have a 1 minute inverse. Here we have a 1 minute inverse fair value gap. So as soon as we're inversing that gap and we take a trade, we will not be aiming for this fair value gap. We'll be aiming for the next fair value gap after this fair value gap gets disrespected. So after this fair value gap, we have this fair value gap. So it only makes sense aiming for this fair value gap, right? So if I was actually keeping a close watch on S&P, I would not have taken this trade on Nasdaq. Why? Because we've tapped into a 1 minute fair value gap on S&P. So we definitely should be seeing some reactions to the downside. And then that was exactly what happened. So when I saw this 1 minute fair value gap getting tapped on S&P, I immediately took a sell trade here because we're inversing this 1 minute gap on Nasdaq. And that was the trade I took. As you can see, I took another sell position right here after we got stopped out. So I just went for a 1 to 2 risk reward. It was actually a mistake. Like, I was supposed to keep on the trade, but on my phone, when I took the trade, I mistakenly closed the trade. That's why you see me entering immediately as I closed. I was supposed to hold this trade for a 1 to 2, but I mistakenly closed the trade right here. That's why I entered another trade. So basically, I was only supposed to enter one trade, but because I mistakenly closed on MT5 on my phone, I had to re-enter again, and then I closed for a 1 to 2. So yeah, that was basically today's trade. And yeah, that's basically it, and I'll see you guys tomorrow.